Well, one of the biggies reporting next week is Apple, and it is reportedly planning to move manufacturing of U.S.-sold iPhones to India as soon as next year to avoid tariffs on China. But the street's biggest Apple bear suggests the goal is unrealistic. Moffett Nathanson writing in a note to clients today that a global trade war is a two-front battle impacting costs and sales. Moving assembly to India might, emphasis on might, help the former. The latter may ultimately be the bigger issue. Craig Moffett, who's got a sell rating on Apple, is behind the note. He is the firm's partner and senior managing director. Craig, always great to see you. You've had a great call on Apple. That sell rating was put on the stock back in January. You leaned in again when you lowered the price target and lowered estimates as well. So at this point, what is the biggest? There's a myriad of issues. It could be tariff uncertainty. It could be brand or American brand damage, Apple brand damage. What is the biggest issue here for the stock?
Hi, Melissa. First, I don't think of myself as the biggest Apple bear. I think of quite highly of Apple. My concern about Apple has been the valuation more than the company. But I would say, to your question, the answer is sort of all of the above, right? You have a tremendous sort of menu of problems created by tariffs, and moving to India doesn't solve all the problems. Now, granted, it helps to some degree. By the way, I would sort of question how that's going to work if the glass and the bill of materials for the entire phone is manufactured in China, and yet it's assembled in India. It's not entirely clear how that, to the extent to which that will avoid Chinese tariffs. So there's still some questions about that. But even if you do that, what you were raising is a series of questions about the demand side that is created by a tariff war. And in a trade war, it's not just the cost of goods, it's also the demand that suffers.
Right. Also, you know, the companies actually that would manufacture the phones in India, one of them is still Foxconn. So they could still have pressure from the Chinese government, even if producing in China. I'm wondering, Craig, though, you know, when it comes to this sort of demand issue, you know, in China, one could argue that Apple was already starting to lose that battle in terms of losing market share to local brands. And this sort of trade war could actually accelerate sort of the backlash against Apple. And then you add to that all of those people out there in China who are upgrading to AI-enabled phones there, who are out of the Apple ecosystem potentially permanently. How do you view that market share loss? Because it's not just the numbers here and now, but there seems that there would be a knock-on effect going into the future of those lost customers.
You're right, Melissa. It's a very real problem, right? During the first quarter, we've seen declines, or we'll see declines of something like 8% in China. But that's against a backdrop of some pretty significant handset subsidies. And the volumes are really going to the Huawei's and the Vivos and the local competitors in China rather than to Apple. Some of that is because of the price point. The subsidies were aimed at lower price phones. But some of it is that kind of nationalism that it's viewed as patriotic in China to buy a Chinese-made phone and a Chinese-branded phone. And that, exactly as you say, means those people won't be inside the Apple ecosystem and won't be generating revenues 2, 3, 4, 5 years from now.
Hey, Craig, it's Tim. I guess I'd like to talk a little bit also about, post DeepSeek. This was seen as kind of a net positive for Apple, because maybe there's a lot, there certainly could be a movement to handsets a lot faster. There's, I think, universal conviction or view that the Apple intelligence has been a big nothing, but it wasn't priced into the stock. So I'm just trying to understand how you view. I still ultimately believe Apple's power is that installed base, and that it will be the way AI is served up to many people, and they will need to refresh at some point. Can you kind of lay this out?
Yeah, thanks, Tim. You could see it either way, right? I mean, on the one hand, the idea when DeepSeek came along, it did endorse the model of, if you'll forgive the pun, of smaller models on handsets. On the other hand, remember that the enthusiasm for Apple is primarily based on the idea that an AI solution on the handset is going to require substantially more memory and a more powerful processor. DeepSeek raised some questions about whether that's going to be the case. And remember, we've said all along that if you're going to underwrite an upgrade cycle in your multiple for Apple, it can't be a one-time upgrade cycle. It has to be a permanent acceleration in the rate at which people upgrade their phones. DeepSeek, I think, raises some real questions about how much that's going to be required and how much can be done with small language models instead of large language models.
It's Karen. Thanks for being on, Craig. Let me just ask you, so you have this $141 price target. What are the pieces that got you to that $141 valuation?
Well, so it's a couple of things. First, I think you have to, we wrote about in our report, you first have to acknowledge that with interest rates higher and with a higher equity risk premium, a slightly lower multiple for the whole market, by the way, is warranted. I heard Tim talking about that before I came on. I think that's exactly right. You have to question the multiple. So we've trimmed our multiple a little bit, but we've also trimmed our estimates. So, you have about a $300 billion product business at Apple, aside from services. Let's say there's a $60 billion or so cost of goods sold there. Depending on what the tariff level of that, you have $20 billion. Now that might be an increase in cost that's absorbed to some extent by the suppliers, to some extent by Apple itself, or to some extent by consumers. But you also have the demand destruction that's created by potentially higher prices. Remember, you had AT&T, Verizon, and T-Mobile all this week come out and say, we're not going to underwrite the additional cost of tariff handsets. The consumer's going to have to pay for that. So you're going to have some demand destruction that's going to show up in even longer holding periods and slower upgrade rates, all of which probably trims estimates. Next year consensus for the full year is about $7 or about $8. I mean, we cut that down in our model to about $7, and with a small cut to the multiple, you're talking about a warranted value that's probably in the 140 range. And again, none of this is because Apple is a bad company. They still have a great balance sheet, a great consumer franchise. It's just the reality of there are no good answers when you are a product company and your products are going to be significantly tariffed and you're heading into a market that is likely to have at least some deceleration in consumer demand because of the macroeconomy.
Craig, great to speak with you. Thanks for joining us.
My pleasure. Good to see you.